Hello guys. So I'm Shubham Anveka. I'm one of the Sean members group. I'm one of the member from I'm one of the members from Sean's group. The reason I'm making this video is because I want to share my knowledge and my experience and my observations which I have made with the help of ICT's knowledge. Sorry, I'm making this video because I want to share my knowledge, my experience, and my observations with SMT. We we all know that SMT is king because whenever there is a sharp move in the market, whenever there's a big move, it happens with SMT. If there is no SMT in the move, then that move might be a fake move because there is no support from the smart money. As we all know, SMT is the king. Lot of the times what happens is we see SMT and we enter the trade and we get stopped out. If you all are facing this problem with SMT, this video is for you guys. In this video I'm going to speak about liquidity, how the liquidity is taken, how smart money traders get in the market, and how to look for SMT, when to look for SMT, and where to look for SMT. So let's say SMT happens here, here, this is Euro and this is GBP. Okay, let's say this is an old high and this is an old high on Euro and GBP. What will happen is smart money will take the old high of Euro. GBP smart money will not attack the old high and it will break the pre-terminus, and GBP will break the pre-terminus. This is the exact way the SMT is formed. We all see this, and retracement and sell, retracement and sell. We all see this setup, but still we fail, still we get stopped out. The reason for this is we are missing one key important point, that is understanding this. When Euro is breaking the old high, it is taking external range liquidity. When GBP is not breaking the old high, it is taking internal range liquidity, right? Euro is taking external range liquidity, GBP is taking internal range liquidity. So this high, old high, can be a previous session high, previous day high, previous week high, or previous month high, right? So this is what if we compare this is combination of ICT's 20-day, 40-day, and 60-day look back period. What does it means? SMT is formed when market one pair is going to take 20, 40, or 60-day old high external range liquidity, and another pair like GBP is going to fail to take 20, 40, and 60-day old high. So one pair is going to take external range liquidity, another pair is going to take internal range liquidity, and that is when our SMT is formed. So we, even though after knowing this we get stopped out, so because we don't know the right time to look for SMT. So the right time to look for SMT is, let me erase this. If market is breaking this 20-day old high on Euro and on GBP, if market is failing to take this 20-day old high, this is the right time. This is the right time to look for SMT. Over here, you can do this. You can look for this. When one pair is taking external range liquidity and another pair is failing to take external range liquidity, means it is taking internal range liquidity, that is the exact time for you guys to go in the markets and look for SMT trades. So if you guys have taken SMT trades in the past, all your SMT winning trades have this triad in them, and all the failed SMT trades are because you just opened your charts and look for SMT sell. This becomes our first leg and this becomes our second leg. This becomes our second leg. This becomes our first leg. This becomes our second leg, right? This becomes our first leg. This becomes a second leg. So what happens is one pair is going to break the first leg, another pair is going to fail to break the first leg, and that is the when exact time to look for SMT. But what are we doing? We are just opening our charts, we are zooming into the charts like this, and we're looking for SMT over here. We're not identifying if market is taking external range or internal range, if market is breaking the first leg or first leg in here, if market is just opening the charts and looking for SMT, and that is the way we all lose with SMT. So I'm going to give you examples with this. Next time from Monday onwards, if you are trading in this market, I want you all to do one thing. Look, just mark down previous days highs and lows. Just do that. If euro is breaking previous day high and GBP is not breaking the previous day high, that is the right time to look for SMT. That is the only right time to look for SMT, because that is going to give you wonderful sells. That's it. If euro is breaking the previous day low and GBP is not also breaking the previous day low, that means this is not the right time to look for SMT, right? There are three conditions which I am going to give you all, right? I'm going to give you all. So the first condition is perfect SMT. Perfect SMT means one pair is taking external range liquidity, other pair is failing to take external range liquidity, and you're looking for SMT on the second leg to go down. This is the first case scenario. What is second case scenario? Right. Second case scenario is unperfect. Click. Second case scenario is one one is taking external range liquidity, one is taking internal range liquidity, but on second leg it is not giving SMT. It's giving breaker entries on the both sides. Let's say it's giving both breaker entries on the both pairs. This is no trade. Like if market is taking external range liquidity and market is taking internal range liquidity and giving you mitigation entry, this is no trade. This market is giving you mitigation entry, this is no trade. Means market is fulfilling the first criteria, looking market is taking external range and over here internal range, but on second leg it is not giving you SMT. On second leg it is not giving you SMT. This is the second criteria where you don't take trades. So the third criteria is market on euro is taking external range liquidity, market on GBP is also taking the external range liquidity, market is taking internal range liquidity on euro, market is taking internal range liquidity on euro. This is the third case scenario where you don't take trades. You only take trades in the first case scenario, that first case scenario, that is one market is taking external range liquidity and you are getting a SMT, and market is not taking external range liquidity and you are getting SMT on second leg. This is the right time to look for trades. The only case scenario, if you do this, I promise you, you will not lose a single trade in the market. If you do this, you will not lose a single trade. Your win rate will go to 100%. I promise you. Not I won't promise you, you will see the results. You will see the results. You will be aware, you will be conscious before you take trades. You will not take trades because you want to feel good. You will not take trades because you want to take trades. You will not take trades based because of any other emotions, because you know the exact entry points. You know where you have to get activated in the market. You know where to enter, right? So please don't be foolish and get stopped out when you have this